Are you new to investing? Curious about the world of stocks? Look no further. In this video, we'll guide you through the basics of stock investing, helping you take the first step towards financial success. When it comes to stock investing, knowledge is power. So let's start with the basics. The stock represents small ownership in the company. That means that depending on how many shares you purchase, you have a prorated ownership in that company. That may entitle you to voting, dividends, and other benefits. It depends on the company and the stock specifically that you have to read the fine print on. When you purchase those shares, you become that owner sharing in the profits and growth of the company. But again, each company is different, so you have to read the fine print in terms of their prospectus to understand what it is you're entitled to. Research is critical before you start investing. Start by understanding different industries and companies. Look at their financial statements, performance, growth potential. This research will help you make informed decisions and reduce your risks. Understanding financial statements is very critical. This doesn't mean you have to be an accountant or have taken a full set of courses, but certainly any knowledge you take will be very beneficial to you. Understanding financial statements, including balance sheet, income statement, cash flow statements, will guide you in terms of understanding companies specifically. But it is very important to also understand the industries in general that you are trying to invest in. The next step is choosing the right brokerage account. This will all depend on your specific interests. There are many options available. So find the one that suits you, whether it's low fees, user-friendly platforms, or a variety of investment options. To give you an example, there's many robo-advisors that have come out in the last few years, which basically allow you to trade on your own with a computer AI-assisted tool in the background, which presumably will be the lowest in fees. There are also financial advisors, people like myself that assist and manage money on behalf of clients in exchange for a fee. That can be a fixed fee, it can be based on commissions, that sort of thing. And then in between, there's self-directed accounts that have their own fees attached to certain trades that depend on the institution. For example, the big banks, specific boutique platform out there. Now let's talk about investment strategies. There's two common approaches to investing, long-term and short-term. Long-term investing, also known as buy and hold, is a passive form of investing, which basically requires you to buy stocks with the intent to hold it on for a long period of time, with the hopes of the companies you buy into grow over time. You may decide to sell at some point when you feel that the company has reached its peak or find a better option. But the idea is that you buy and hold those investments for a very long period of time. This can be anywhere from 2 to 5, 10, or even longer in terms of time frame. The other type is short-term trading, which can also be called day trading, arbitrage, etc. And the idea behind short-term trading is that you buy and sell stocks in a very short period of time. This can be within hours, days, weeks, but the idea is not to hold the investment for too long. The purpose of this is mainly to take advantage of inefficiencies in the market, where in the minds of the trader, the stock in question is either overvalued or undervalued according to their analysis. A lot of times companies may be overpriced or underpriced in the markets because the markets are reacting to many different factors. Could be general economic conditions or human emotion, but there may be some inefficiencies in the markets. And that's where short-term trading comes in to take advantage of that and essentially make a profit. This requires a lot of time, effort, and education. So you have to decide which route you want to go. To be an effective short-term trader, you literally have to spend several hours a day. It can be a full-time job in itself. The next thing to consider for stock investing is diversification. It's key to reducing risk. Instead of putting all your eggs in one basket, invest in different companies and industries. The idea again here is that if one company suffers, the rest of the companies in your portfolio will not necessarily be impacted, and your overall returns will not be as negatively affected as if you had decided to invest in similar companies that were all had the same impact. This will help protect you if one stock performs poorly. Emotions can be a big hurdle to investing. The key to investing, especially whether it's long-term or short-term, is to not let your emotions get ahead of you. Very common in our industry to see investors buy at the wrong time based on fear, anxiety, excitement, etc. A lot of times they will buy high or sell low, which is the opposite of what fundamentals will suggest. So the key is to create a plan and stick to it and not let your emotions get in the way of it. That may require you to stomach short-term losses and volatility, but in the long run, you'll see the benefits. Lastly, remember, investing is a journey. It takes time and patience to build wealth. Stay informed, keep learning, and adjust your strategy as needed. With dedication and perseverance, you can achieve financial success through stock investing. Thank you for watching our video. If you found it valuable, don't forget to subscribe to our channel for more helpful tips and insight. As well, please reach out to us if you are looking for assistance with investing. Thank you very much.